Okay, so for this next video lecture, still in Module 10, so we will discuss about revenue or receipt cycle. Okay, so the revenue receipt cycle encompasses the processing of customer orders and making sales, as well as the delivery of goods and services to the customers. And then it will be accounted for under the customer's accounts receivable if that is made for credit. And in case of payment, then the cash will be deposited. And after which, monthly bank statement will be reconciled with the recorded amount in the books of the entity. Okay, so this is a revenue cycle. Okay, or these are the transactions also include which are included under the revenue or receipt cycle. Okay, so the activities in this cycle, this usually involves the following departments. So we have under the sales department, credit department. Sales department basically is where the source of revenue comes from. Okay, from the sale or the performance of services. Credit department will come in once the entity extended a loan to their customers or extended a credit transaction of the sale to their customers. Warehouse is where inventory is stored. Shipping department is the um, the office who are responsible for the shipment of the goods to to be delivered to the customers. Billing department is also responsible for the collection, okay, or informing of the customer about their accounts, okay, that they will pay to the entity. So the mail room also, this is where any uh, the for example, if the payment is made through the check or other correspondence made between the buyer and the seller, okay, transactions, they are the ones who are responsible. For the cashiers department, so they are the ones who are receiving the payments or the collection of cash. And the general accounting department, of course, is the one who records these transactions. Okay, so we will discuss each of this department, okay, with respect to the control procedures that should be applied, okay, to detect any misstatement or fraud or error that may exist in such departments. Okay, so for the first control procedure is for the sales department. Okay, for the sales department, so we have the following policies and procedures that should be applied. Okay, so the first is policies for accepting and approving customer orders should be clearly described, meaning there is a manual which contains the rules and procedures on how to accept and approve customer orders. Okay, so that the person who are handling these transactions uh, will have the guide, okay, on how to process and if that transaction is allowed or not. Okay, another is customer orders should be transcribed in the formal sales order. So once the customer places their order, it should not be made orally only. Okay, the entity should record it in the sales order form where it specifies the amount, the quantity, and the type of goods that the customer will order. Okay, so this will also be uh, used as a source document in the recording of the sales transaction. Okay, next is all sales or order should be consecutively numbered. Okay, meaning aside from the date that is specified in the form, there should be a pre-numbered or pre-numbering of the sales order form. Okay, so as to control the number of transactions that occurred in a day. Okay, and also to see to it that there are no transactions which were or which will be recorded twice. Okay, for that matter. Okay, so this is a form of internal control. So another is all sales order should be properly controlled and accounted for. Okay, so aside from pre-numbering, there should be someone who is in charge for the sales order. Okay, and it should be accounted for, meaning all uh, sales order should be forwarded to the accounting department together with the other source document to record this sale transaction. Okay, another is copies of sales order should be forwarded to, okay, the customer should have a copy, the credit department, okay, because in this case, the credit department will need such for the determination of the amount of the accounts, okay, that will be collected or collectible from the customer. For the warehouse, of course, to specify the type of inventory that they should release based on the order of the customer. Shipping department, okay, this is also very important because before shipping the goods to the customers, they should make sure that it is complete and correct items. Okay. Another is billing. Okay, of course, this is for uh, the ledger copy for the recording, okay, of the sales transaction. Okay, so these are the different department that should have the copy of the sales order. So that's how important sales order is in the sales department. Okay, another is one copy of sales order also will be placed in the customer open order file. So aside from the customer having their own copy, the entity should also have this customer open order file. Okay, so this is just to make sure that all the other sales order copy are in conformance with each other. Okay. Another is a packing slip. Okay, this is sent to the shipping department. Okay, of course, meaning these items are now released and ready to be packed and to be shipped to the customers. Okay, so this is one of the function of the shipping department. Okay. Another is back order should be properly controlled as well for the returns of the sales. Okay, so there should be a process or policy and in recording also of the sales returns. Okay, another is information about product prices, discount and return policies, postage and fees, and other important matters should also be communicated to the customers if that is added to their bill, or who will shoulder such additional um, fees, okay, as well as the product price, okay, so that they will know how much they should pay to the entity. Okay, so that is for the control procedures for the sales department. So this should be followed to detect and correct any misstatement that may exist. Okay, so the next department under the receipt or revenue cycle is the credit department. So we will discuss the control procedures specifically for this office, okay, or under their transaction. So we have here the following policies and procedures that should be applied in the credit department. Okay, so first, credit department should be independent of the accounting, billing, sales, and cashiers department. Okay, because in this case, the credit department normally, they are the one who are responsible for approving the credit to be extended in, credit to be extended to the customers. Okay, so there should be a policy on uh, who are the customers who are qualified to be extended, okay, for credit, because not all customers are qualified. Okay, for example, the customer is not paying their bill on due time, or they have been delinquent or not paying for how many billing periods already. So basically, once they applied for another transaction for credit, they will not be approved anymore, okay, because of their status. Okay, so in this case, if you could still remember, segregation of duties, okay, who approves, who records, and who collects, or who has the custody, okay, of the asset should be segregated. So basically, under the credit department, they are the ones who are authorizing the credit to the customer. So they should be separated and independent from the accounting, billing, sales, and cashiers departments. Okay, so that is the reason. Okay, another policy or procedure under this department is that the customer's credit position should be properly examined. Okay, this is what we have mentioned earlier before approving or extending their credit. Okay, so there should be an analysis of the payment history and attitude of a particular customer before they can be approved for another credit or the extension of their loans. Okay, so another is the credit department personnel should also possess sufficient information about all customers' past due accounts. Of course, this is to determine any bad debts, okay, which are outstanding, and the amount of collectibles, okay, from a particular customer. Okay. Another is a copy of approved sales order should be sent to the inventory control department upon the approval of credit. Otherwise, the customer order department should be notified in case credit is rejected. So, of course, once approved, then the inventory control will be informed, okay, because in this case, a release of the order will take place because the order was approved. However, if the customer order, or if the customer was denied or their credit is rejected, so the order department should be notified, meaning, or in other words, or others may also return, okay, the order slip to the order department, okay, and noted there that the credit was rejected, so that that transaction will not take place, okay, or the inventory will not be shipped to the customer because again their credit was rejected. Or else this transaction will take place only if the customer will pay for cash, okay. So that's how it is, okay, under this transaction. Okay, so another is the credit manager should also review all receivables and should investigate past due accounts if any. So again, this is to determine any accounts receivable outstanding balance and any uncollectible or bad debts, okay, where these accounts may be transferred into a loss or expense account because it can no longer be collected, okay, or the status of the customer if they are still able to pay for their outstanding credit. Okay, another is the credit department should also authorize the processing of sales returns based on the nature of the sale and the circumstances of the return. Okay, so here, sales return will only be accepted once the reason of returning is in accordance with the policy. Okay, but if, for example, the return was made and any reasons of the customer is not acceptable, then probably they will not accept the return. Okay, so that's how it is under the credit department for authorizing the processing of sales returns. Okay, so those are the different control procedures for the credit department. Okay, so we will proceed with the next department, which is the warehouse. Okay, still under the revenue or receipt cycle. So under this department, the following policies and procedures should be applied. Okay, first, a stock release copy of the sales order, which is also called the picking ticket, should be received from the sales department before the inventory will be released. Okay, so this was mentioned also in the sales department. Okay, procedures. Another is the picking ticket will identify the items of inventory that must be located and picked from the warehouse, specifically the items ordered by the customers. Okay, next, the picking ticket will provide formal authorization for the warehouse personnel to release the specified items or inventory. Once there is no picking ticket or sales order, there should be no release of inventory from the warehouse. Okay, next is after picking the stock, the order is verified for accuracy of its amounts and quantity or quality, and the inventory and verify the stock release document, okay, will be sent to the shipping department for delivering the order to the customer. And lastly is the warehouse employee will adjust the stock record to reflect the reduction of the release of the ordered inventory, and stocks on hand should also be kept track and updated, and the orders for necessary items should be made through the purchasing department. This is in the case where the inventory is in its reorder point, meaning the level of inventory suggests that purchase of inventory should be placed so that stock out will be avoided. Okay, so that's for the warehouse department. So we will continue the other departments in the next video lectures.